Hello, my name is Karen Riddick and I am the Pathways Growth Coach for Dumfries and Galloway, and in this session I will cover 10 essential business numbers that every business owner should know. I am talking here about your business figures or your accounting data. Now, as a coach, I'm often surprised at how many businesses don't know or understand their basic business data and are therefore unable to plan ahead or improve performance. If you see yourself in that position, I hope that you will benefit from this short lightning talk which covers the main figures that you should be keeping your eye on. The first essential is obviously your turnover. This is the total money you receive from sales, or the revenue income that you get from selling your products and services. That money may come from multiple sources and income streams, and it include cash, card payments, bank transfers. It may be received in different currencies. Turnover is the total of all of that income generated by your business. Now, it's expressed as a gross figure with no costs removed as yet. As you will see, costs are also essential numbers and they're split into direct costs and indirect costs, but we are coming on to those. Direct costs are in fact essential number 2. These are the costs that are directly linked to each sale. For example, a product-based business selling on Amazon might need to buy stock in to sell, pay for packaging and postage, and pay Amazon a commission fee. These are all costs that are necessary for the sale to take place. Similarly, a service-based business might have materials to buy and other such costs. For that reason, direct costs are also known as cost of sales. They're different from indirect costs, which are also known as overheads like rent or subscriptions. Direct costs will vary from one business to another, but the principle is usually the same, and it's important that you know what your direct costs are. Now, once you know your turnover and your direct costs, you can calculate essential number 3, which is gross profit. It's calculated by subtracting your direct costs from your turnover. So the gross profit of company A is £60,000 because its turnover is £100,000 and its direct costs are £40,000. The gross profit of company B, though, is only £30,000 because its direct costs are much higher, probably too high. Now, even if your gross profit looks healthy, remember that this figure represents the amount of money that you have left to cover your overhead costs and take the income that you need. So if your gross profit is too low, then your business may be unable to pay for its overheads or to generate income for you. So now we know that gross profit is the cash that remains after direct costs have been paid. This is a critical figure, of course, but it doesn't tell you how hard you had to work to make that profit and whether it was worth it. That's why gross margin is essential number 4. This shows what your gross profit was as a percentage or proportion of your sales. In the previous slide, we looked at company A with its gross profit of £60,000. So in the example, that equates to a 60% gross margin. Company B, however, has a gross margin of 30%, which means it's less efficient. It would have to work twice as hard to make the same profit. Its low margins are probably also putting the business at risk if any of its costs rise further. Now finally, as a top tip, remember that because gross profit and margins are based on direct costs of sale, you can use these figures to identify strong and weak products or services, as well as having an overall view of your wider business efficiency. We touched earlier on indirect costs, but we're looking at it again here as essential number 5. Indirect costs are the costs of running your business. They are also known as overheads or fixed costs, and unlike direct costs, you'll often pay them regardless of how much you sell. For example, rent, software, utility bills, accounting fees, and similar. And I'd also mention here that service-based businesses who generally work from home tend to have very few overheads. So if you are a service-based business, make sure that you're accounting for your main cost, which is actually your time. Finally, we're getting towards the bottom line. We now know our turnover, our direct and indirect costs, so that means we can calculate the net profit, which is essential number 6. This is the cash that you have left after your direct and overhead costs have been paid. In other words, it's the final business profit before tax once all of your costs have been subtracted from all of your sales income. In this example, we use the same figures as before, but we're introducing overheads of £30,000. And with all of that taken into account, Company A is left with £20,000 of net profit, but Company B is left with nothing. Net profit shows precisely if your business is making profit or loss and by how much. And again, it tells you how much is available to leave in the business or to take out as income. You hopefully know the script by now, folks. Profit is all about how much cash the business makes, whereas margin is about how efficiently it makes that profit. We know the net cash profit of Company A and B, but again, we need to convert this into a margin calculation. Company A is left with £30,000 net cash from its original £100,000 of turnover. That's a 30% net margin after direct and indirect costs have been counted. Pretty good. And we all know what happened to Company B. It's got zero, and it will need to look very hard at either increasing its sales or reducing its direct and indirect costs if it's going to survive. Now, just to point out that in this example, we did use high direct costs to illustrate the poor performance of Company B, but we could equally see a company which has an excellent gross profit and margin, but where its overheads are wiping all of that profit out. This is why you need to separate out your costs and keep your eye on everything. Now, usefully, on this very table, there are 7 out of the 10 essential business numbers. We've got turnover and direct costs. Take one away from the other and you've got your gross profit and cash. You can also look at business efficiency by converting that gross profit into gross margin. You can take your overheads from there to work out your net profit and also your net margin, which is your overall business efficiency. If you don't know how these figures stack up in your own business, then it's time to get that calculator out. The final 3 essential numbers are also important, but they don't form the same sort of arithmetic journey that we've just had. The first one here is the break-even point, which is exactly what it sounds like. It's the point where your income just covers all of your costs, the level of sales where you're not making any profit and you're not making any loss. Below this point you would lose money, and above this point you would make profit. And we did see on the previous slide that Company B finished on its break-even point. Looking now at net cash movement, this is a worthy essential number 9 because this is what dictates whether you have available business cash in the bank. It's the difference between money coming into and out of your business bank account. Now, it's not the same as profit and loss because cash movement is all about timing. I may well be a profitable company, but if all of my costs come out at the same time and I drift into an overdraft, or the bank bounces a payment, or I can't make an essential purchase, then you can see what the problem is. So it's a good idea to check the timing of your income and expenses and adjust anything if you need to keep your bank account out of the red. In particular, remember to account for the timing of large unavoidable bills like your self-assessment income tax, VAT and similar. Finally, the health of your business is not just about profit and loss or cash in the bank. You might have other assets and liabilities to account for, so essential number 10 is about what your business owns and what it owes. Assets are things like cash, stock, vehicles, premises and money that's owed to you, and liabilities are what your business owes, so loans, supplier bills, a tax bill due. Watch out, folks, for money getting tied up in stock, equipment and premises. This can build up over time and seriously reduce your cash flow. This essential number is also referred to as the balance sheet then, and it's showing your overall financial position at a point in time. It helps you to understand how strong and stable your business is, and it also helps you to value your business. And on that note, if I did have longer, I would include the value of your business as an essential number as well. So there we have it, 10 essential numbers that every business should be on top of. Folks, it's fine to use a bookkeeper or accountant, but you also need to know your own business inside out. If you do, trust me, you will improve your confidence, reduce your stress, make better business decisions, and enjoy that feeling of being in control. If you're not already doing so, I do recommend inexpensive accounting software such as QuickBooks, Xero, Free Agent, or other software that you can have as part of your bank account. For very little cost, you can then have all of your essential numbers and more available at the click of a button.